Ever wondered if your financial past could slam the door on your investment goals with M1 Finance? It's a question many aspiring investors ponder, especially when the allure of automated investing and personalized portfolios beckons. You're excited about the potential, the fractional shares, the control, but then that little voice whispers, "What if I don't pass their credit check?" It's a valid concern. While M1 Finance positions itself as a platform to help you build wealth, they do employ credit checks for certain features. It's not about denying you access to the entire platform, but rather about assessing risk for specific functionalities they offer. So, before you dive headfirst into setting up your pies and automating your investments, let's unravel the mystery of M1 Finance's credit checks and, more importantly, what could potentially cause you to stumble. Think of it this way. M1 Finance isn't just a brokerage account where you buy and sell stocks. It offers integrated features like M1 Borrow, a portfolio line of credit. Just like any lender, they need to evaluate your creditworthiness before extending such borrowing power. This isn't about judging your past, it's about responsibly managing risk for both themselves and their users. So, what exactly are they looking for? While M1 Finance doesn't publish the exact intricacies of their credit check algorithm, and frankly, most financial institutions don't, we can draw upon general credit assessment principles and common factors that lead to credit application rejections across the financial landscape. Understanding these principles will equip you with the knowledge to assess your own situation and potentially take steps to improve it. Let's start with the obvious, a low credit score. Your credit score is a 3-digit number that summarizes your credit history. It's a snapshot of how reliably you've managed credit in the past. M1 Finance, when evaluating you for features like M1 Borrow, will undoubtedly look at your score. While they might not have a publicly stated minimum, a score that falls into the poor or fair range is likely to raise red flags. These lower scores often indicate a history of missed payments, defaults, or other negative credit events, suggesting a higher risk for repayment. But it's not just the number itself. The underlying factors contributing to that low score are equally, if not more, important. These are the building blocks of your credit history, and negative marks here can significantly impact your chances. One major red flag is a history of missed payments. Whether it's credit card bills, loan installments, or even utility payments that have gone to collections, a pattern of late or non-payments paints a picture of financial instability. Lenders, including M1 Finance when considering you for credit products, will view this as a strong indicator that you might struggle to meet future repayment obligations. The more recent and more frequent these missed payments, the greater the negative impact. Another critical factor is high credit utilization. This refers to the amount of credit you're currently using compared to your total available credit. For example, if you have a credit card with a $10,000 limit and you're carrying a balance of $9,000, your credit utilization is 90%. High credit utilization suggests that you are heavily reliant on credit, which can be a sign of financial distress and a higher risk of default. Even if you haven't missed payments, consistently maxing out your credit lines can negatively affect your credit score and raise concerns for lenders. Defaults and collections are significant negative marks on your credit report. A default means you failed to repay a debt as agreed, and a collection occurs when a creditor hires a third-party agency to recover the outstanding balance. These events indicate a serious breakdown in your repayment history and are strong indicators of higher credit risk. Having active or recent defaults and collections will almost certainly hinder your ability to pass a credit check for features like M1 Borrow. Bankruptcies are perhaps the most severe negative credit event. Filing for bankruptcy signifies an inability to repay your debts and will have a long-lasting impact on your credit report. While the specific impact and duration on your report depend on the type of bankruptcy, it's highly likely to result in a failed credit check for any new credit applications, including those associated with M1 Finance's borrowing features. Beyond these major factors, other elements can also play a role. A short credit history can be a disadvantage, even if it's a clean one. Lenders prefer to see a longer track record of responsible credit management. If you're new to using credit, you might not have enough data for M1 Finance to confidently assess your creditworthiness. Too many recent credit inquiries can also raise a yellow flag. While applying for credit is a normal part of life, a flurry of applications in a short period can suggest that you are desperately seeking credit, which can be a sign of financial trouble. These hard inquiries, as opposed to soft inquiries like checking your own credit, can slightly lower your credit score and may be viewed negatively by lenders. Furthermore, errors on your credit report can also lead to a failed credit check. Mistakes like incorrect account information, inaccurate payment history, or even accounts that don't belong to you can negatively impact your score. It's crucial to regularly review your credit reports from all three major credit bureaus, Equifax, Experian, and TransUnion, and dispute any errors you find. 1. www.collegeave.com. www.collegeave.com. It's important to reiterate that M1 Finance's primary offering is an investment platform. A credit check is typically only triggered when you apply for features that involve lending, such as M1 Borrow. You can likely still open a basic investment account and utilize their automated investing tools even with a less-than-perfect credit history. However, access to borrowing capabilities will be subject to their credit assessment. So, what can you do if you're concerned about passing a credit check? The first step is to know your credit score and understand your credit report. You can obtain free copies of your credit reports annually from annualcreditreport.com. Review them carefully for any errors or negative information. If you find issues, take steps to address them. Dispute any inaccuracies with the credit bureaus. Focus on improving your credit utilization by paying down your outstanding balances. Make consistent, on-time payments on all your debts. Over time, these positive actions will help rebuild your credit score. Building a solid credit history takes time and discipline. There are no quick fixes. Be patient, be diligent, and focus on responsible financial habits. Understanding what factors contribute to a good credit score and actively working to improve them will not only increase your chances of accessing features like M1 Borrow but will also benefit your overall financial well-being. While the exact criteria M1 Finance uses for their credit checks remain proprietary, understanding the general principles of credit assessment empowers you to understand your own situation and take proactive steps. It's about demonstrating a history of responsible financial behavior, which ultimately builds trust with any financial institution. With that said, thanks for watching and until next time.